why you were thinking or why the thought was coming. Okay, this is it now. Okay, I'm done with flipping. I need to reinvent myself. Oh, I'm done with the tax liens. I need to go reinvent myself. So what was going in your mind at that time? Share that with us.
Yeah, well, two different things there. So the reinventing was a different mindset. That was all right, I didn't have a choice, right? Now it's fight or flight, right? So, and I'm one of 12, the fifth of 12 kids. We moved around as kids. So I think you learn to take care of yourself. There's that innateness that kicks in at an earlier age than maybe, if you're one of two type of thing. But um why would I stop flipping or renting or tax liens or anything like that? Well, tax liens, I only ever bought one. I never saw how you could scale that. I still don't think you can. I think that's just a little hobby. But flipping, the reason I stopped, because I actually did it on the side for a while longer. And I did it in another reinvention phase we haven't gotten to yet. I think that's just something you can always fall back on. It's nice to have in your back pocket.
Hello and welcome to the Wealth Vibe Show. I'm your host, Pinky Loomba, and this is the place where we elevate the conversation around wealth, helping you create it, protect it, and expand across every dimension of your life, financially, mentally, and spiritually. Today, we are diving into an asset class that many people overlook, but one that has been quietly building massive generational wealth for those who understand it: self storage. To guide us through this conversation, I'm thrilled to welcome Joe Downs, co-founder of the Beldros Group. Joe is a lifelong entrepreneur with ventures across securities, mortgage, hospitality, and real estate. He is known for spotting niches within niches. I love that. And now for modernizing self storage, offering both active and passive investors opportunities to unlock wealth in ways most never think about. Welcome, Joe, to the Wealth Vibe Show.
Thank you so much for having me. It's a pleasure to be here.
Likewise, I can't wait to hear your journey. And it's very exciting. And today we picked the topic: unlocking wealth in unlikely places, the self storage path to abundance. So before we dive into the questions, I want our listeners to picture something for a moment. Imagine a row of plain storage units, the kind you pass by on the highway without giving them a second thought. On the outside, they look ordinary, almost invisible, but inside those doors is a steady flow of cash, an asset that thrives in both booms and recessions, and a wealth building machine that has quietly changed the lives of countless investors. So that's the power of self storage. And today, Joe is going to show us how to look beyond the obvious to see opportunity where others see nothing more than steel doors and padlocks. So, Joe, you have had an entrepreneurial journey, like we're talking before we started recording. So, spanning multiple industries before finding your way into self storage. Can you share that journey and vision that pull you towards this niche?
Yeah, let me start with your title is very appropriate, and the way you described it is exactly how I would have described it if you had asked me this before I was in self-storage. Because I didn't know anything about them. I didn't know anything about self-storage, the industry, never rented a unit, never needed to rent a unit. And I would have described them as, and have to folks, as those usually orange looking garage door things all in a row. If you had asked me 10 years ago what self-storage was, I might have said that.
Mhm.
So my journey, and I'll get to that point. My journey, as you mentioned, we were talking briefly before, and you don't want my whole history, but about 20 years ago, um, as I was reinventing, and I skipped one reinvention, that was my second reinvention, I guess.
Mhm.
I started my real estate progression I guess so I'm 51. I'll be 52 this month. Oof. So I was probably 30. I was right around 30, I guess, 31 maybe.
Mm-hmm.
Um, and I started my progression in real estate. I call it the progression, which is everybody probably, I probably read Rich Dad Poor Dad, circa that time frame, because you're looking for something else. I was broke at the time. I had just lost a lot of money in a different industry. It was a restaurant actually,
Mm-hmm.
and so I was reinventing. That's what I was saying. It was my second one. Um, Broke, took a job I knew was just a job, right? A paycheck to pay the bills, pay the rent, and figure out my next move. Um, I guess I wouldn't have described myself as an entrepreneur at the time because I probably didn't really even understand what that was or didn't think I qualified as one is probably more likely. And you look back later and you realize you were, but I was a hustler is what I was. So I had a 9 to 5, Monday through Friday, kind of typical 9 to 5. My last one, by the way, it wasn't my last paycheck. Yeah, it was my last paycheck.
Uh-huh.
Well, I might have one at the next job. Well, details, but it was really my last paycheck. I was bartending at night,
Uh-huh.
and one of my clients, I have to tell you, I was selling radio. I was selling radio
Uh-huh.
advertising. One of my clients was a company called Real Estate Riches, and they were teaching people how to buy, rehab, and flip single family homes, right?
Mm-hmm.
They would have seminars um, where they would advertise on the radio to get people to go to a hotel, one Tuesday night, Wednesday night, whatever it was, and 100 people would show up, and they'd sell about 20 memberships or whatever you call it, for I
Mm-hmm.
think $5,000 each, and it was like it was Friday, Saturday, Sunday, 2 weeks in a row, and course materials, etc. I think it was 2 weekends in a row, maybe three. It's a long time ago, so give me a little grace here. But they would teach people how to find,
Mm-hmm.
rehab, and either rent or flip single family homes. And for me, I still live in the suburbs of Philadelphia, so that's where this is taking place. And I was broke, as I mentioned. I just lost a lot of money in a bar and restaurant. I was trying to recover, so I didn't have any money. So I had to make enough money commission selling radio advertising to buy their course, even though they were my client. And I bought their course, and then I went through their course, and now I'm in real estate. And I don't have any money though. So what am I doing? I'm trying to wholesale. So I truly started at the very beginning of the real estate food chain, which was wholesaling because you're broke, right? And then when you get up enough money, and I think I grabbed a partner along the way, then we started to put stuff under contract, and then and actually we were able to flip a couple, and we started to rent some because then now you're going to real estate meetup groups, and you're learning about you want to get to 10, you get a portfolio of rentals and 250 a month net positive cash flow. Yes, it's going to
Mm-hmm.
be amazing. And, nobody talks about all the headaches that come with that and the disastrous tenants you put in place and, whatever. And I'm not knocking residential real estate. Look, if you're listening and you're in it, you're at least understanding what I'm saying. I'm not beating it up. I love it. I invest in it still. I just don't operate it. But that was beginning of my progression. And then another client came along that was a developer, and that developer took a liking to me. They were advertising with us, and he said, "Hey, look, I have a friend, Gary DeSanto, who's got this company. He's buying multifamily and office buildings around the country, Pennsylvania, Michigan, Ohio. We were in Tennessee, and he said, look, he needs a sales guy because he was doing them as syndications, and actually." He didn't have to go this route, but he was, for whatever reason, he was in the 1031 exchange syndication world. So I all of a sudden had this new purview into this whole world. And what I skipped over was I was a financial advisor before that. So I had a securities license already. So
A
I,
lot of things. Oh my God.
yeah, I know. I hate the term jack of all trade, master of none. I think I'm a master of two now, but look, everything was part of the journey, right? It's part of who I am. The failures,
Exactly.
most importantly, the failures are part of who I am and how I've learned. Um, so anyway, I raised a lot of money for this company, And then, as luck would have it, before you know it, I'm reinventing again. Why? Because 2007 for us it started, but everyone we all are aware of or lived through the 2008, 9. For some people, it extended into 10, 11, 12 crash, right? A real estate crash. It started at the very end of 2007 if you were in commercial real estate. So in 2008 and 9, I was out reinventing myself again. So I was now I have a new tricks in my toolkit, right? So I understand a lot about real estate, both residential and commercial, and a little bit about debt because I also raised some money for some debt funds in that period because I was in that 1031 exchange world. So out reinventing. My thank goodness my wife has a great job because we just started a new family. I just got married. And I'm now all of a sudden not quite the catch I was when she married me. So a friend of mine brought me to a tax lien seminar in Philadelphia at the Pyramid Club. Because I was looking at tax liens, it's real. I'm now. By the way, I get the real estate bug. Once you get the real estate bug, I don't know how you could leave it. I love it. Everything about it. I don't care what I'm doing in real estate. I love it.
That's true. Mhm.
So, and I call that the progression too. So I think it's perfectly natural to start with single family. I think the normal progression is to go to small multifamily from there, and then maybe if you make it to the big leagues, you're buying 300 and 400 unit buildings, right? I was able to kind of skip that through the commercial angle, but I think that's a normal progression. Some people spin off and they're in car washes, or you start adding businesses to the real estate, but it's still real estate at the end of the day, or they get into small retail, or I guess what a lot of people end up in is kind of mixed use. So you get retail with single family or apartments above it, right? So resi above it, and those are all normal progressions.
So let's talk about this journey. That's it's like a really really learning experience in your journey right here. And then I'm going to use your terminology. You said reinventing. So you have reinvented yourself multiple times throughout this journey. So I'm going to ask you a mindset related question over here, right? So what was going on in your mind? Why you were thinking or why the thought was coming, okay, this is it now. Okay, I'm done with flipping. I need to reinvent myself. Oh, I'm done with the tax liens. I need to go reinvent myself. So what was going in your mind at that time? Share that with us.
Yeah. Well, two different things there. So the reinventing was a different mindset. That was all right, I didn't have a choice, right? Now it's fight or flight, right? So, and I'm one of 12, the fifth of 12 kids. We moved around as kids. So I think you learn to take care of yourself. There's that innateness that kicks in at an earlier age than maybe, if you're one of two type of thing. But um why would I stop flipping or renting or tax liens or anything like that? Well, tax liens, I only ever bought one. I never saw how you could scale that. I still don't think you can. I think that's just a little hobby. But flipping, the reason I stopped, because I actually did it on the side for a while longer. And I did it in another reinvention phase we haven't gotten to yet. I think that's just something you can always fall back on. It's nice to have in your back pocket once you know how
So
to
you
do it.
felt like, okay, this is something I was doing. I'm so comfortable. So what I'm trying to do is I'm trying to relate it. I think it's just like you have played video games, I'm pretty sure, when you were young, right?
Yeah.
How the video games are, right? That's how life works. That's the way I look at life, at least, because once you start getting comfortable in whatever phase you're in, whether you're flipping, you're investing, what are you trying to do? So if you are, if you have that grit, or if you're kind of a person who's trying to learn new things all the time, you're gonna strive for something better. That's gonna be the next level, like in video,
Yes.
right? Just a 80-20 rule, right? So you always, if you are a high achiever or achiever or motivated, I would say, ambitious, you're always looking for that 20%. So what happened is when you reach the goal, you get into the 20%. After a while, you start getting comfortable. You see, okay, now I'm again in the 80%. So the next level is again 20%. So you get to
Yeah.
the next level. So that's what is kind of reinvention or redefining is for yourself. I'm writing a book actually on that. It's coming up.
Oh, interesting. Yeah.
So
Yeah.
I just feel like, this is so strange that I talk to multiple people and I see that, how this work with a lot of people, everybody's kind of doing the same thing. And the 80-20 rule is, is such a marker that you can see that in your journey yourself. And that's the reason I was trying to ask you,
That's
what's
funny.
going on in your mind? It's like, okay, I'm comfortable here. Let me try something else now. Like you just said, you had something to fall back on. If this didn't work, you can always come back to it. And the other thing you mentioned, like really good, was you say, failures in my journey was the key to my success, right?
Oh,
So
for
having that positive mindset is really, really good. So let me move
yeah.
on to the next question. I'm going to ask you this. I read in your bio, you often talk about niches within niches. I think this is going to align with you, this question, because that's going to tell us about your next reinvention. So can you tell us the story of the first time you spotted one of those hidden opportunities in self-storage and knew you were onto something big?
In self-storage. Well, we did actually. In fact, we are starting a niche right now. We are in our first developments underway. And I say this, I teach at the Self Storage Academy, and I tell people that I teach and mentor. Self storage is what brought you here, but there are many niches within self storage, or derivatives of self storage, or tangential businesses to self storage, however you want to phrase it. Um, and if you understand self storage and how it works, then these niches or tangents they're not leaps of faith. They're just natural. So one of the niches that we're starting after acquiring 20, um, well, technically, I don't know, 14 or 15 storage facilities we acquired before we acquired one that was not like the others. And then we
Mhm,
went on to, and we still acquire normal self-storage facilities, and included in that normal, I'll put that in quotes, is boat and RV facilities, which is another niche of self-storage. So in the 20 we've acquired, we have a few boat and RV facilities, but the one in particular that's very different than all the rest was what came to us. It was called contractor storage. It was a contractor storage facility. It's in Wilmington, North Carolina. And what makes it different is not just who the customers are, but the size of the units. So
mhm,
a normal self-storage facility, you have, I don't know, 5 or 6 different unit sizes.
mhm,
The most common size, the two-bedroom apartment, if you will, of
mhm,
the self-storage space is the 10 by 10. It's the most
mhm.
common unit, right? It's
True.
10 feet by 10 feet with an 8-foot ceiling and a 7.5 foot door, right?
Mhm,
This storage facility we bought, which was called M2 Maxi in Wilmington, North Carolina,
mhm.
was the smallest size was 450 square feet, smallest. The
Wow.
biggest size in most of our other facilities, 250, 300 square feet.
Mhm,
And maybe there's one bigger than that somewhere, but that's the unicorn. The smallest size of this facility was 450, with the largest being almost 1,000 square feet, right? And then you had 14-foot ceilings.
mhm,
They're 12 and 15 feet wide at least, 25, 40 feet deep, right? They're different unit sizes depending on the square footage, obviously. But you can see that I'm trying to paint a picture for you how different size these are. You walk into a 10 by 10 self-storage unit, stick your hand up, you can touch the ceiling. You can drive a truck with ladders on top into these units, or an RV, right? So it's very different. So we get this thing, we're like, what do we have here? We didn't even know. So
mhm,
we underwrote it. We underwrote it. It sounded weird when I said that. We underwrote it.
mhm,
Um, like we knew how, self-storage. And it checked all those by. It checked every marker, every due diligence side. And we were like, well, we know this isn't that, but at the very least, we know it checks out as that.
mhm,
So if we bought it and operated, we didn't know what we were doing, we could at least market it and manage it as self-storage. We knew we wouldn't have to, but that was our, belt and suspenders. So in the process of buying that, I'll try to make it quick. I had lunch or breakfast with a local mentor of mine, guy who owned a lot of facilities. I meet with him once a quarter, and I asked him about this facility. I said, his name's Ed. I said, have you ever had a lot of business owners, contractors, really, in any of your storage facilities? And he said, yeah. And they're great because they're sticky. They're there for a long time. Um, Good customers, never late, because they're business owners and they can't afford to be late because they can't afford to have their stuff auctioned off in 45 days, right? The only time they ever leave you is when they outgrow you. And he said, but be careful because they'll be hard in your facility. They don't let them work there. Don't let them run power saws there that'll annoy your other customers coming in and out. And you need to budget a little more for your gate maintenance because they're in and out. The average customer is in and out like 4 times a year, whereas these guys are probably in and out 2, 3 times, 4 times a day, right? So you're gonna have your gates gonna be opening a lot more than you would normally expect. Okay,
Mhm.
fine, you can budget for that. So, and then we're walking out the door, paying the check, and he says to me, almost didn't mention this. He said, by the way, if you should probably look into those business customers. You ever heard of last mile warehouse? I said, no. I mean, I said I've heard of it, but I don't know what it is. He said, you should look into that because Amazon and Walmart are growing so fast. They're gobbling up all the warehouse space around. They're uh, they're pushing out all those contractors. All the ones that left me that to go for the 2 and 3 and 5,000 square foot demised units in a warehouse. They're going to
Mhm.
get pushed out soon. They're going to be looking for homes. And then he left. I said, yeah, that's interesting. So we've got this facility. We now own it. And I said to my team, I said, down in Wilmington, take a look in Wilmington. If we raise the rents on these customers, and it was 100% full. If we raise the rents on these customers, where would they go? I mean, if they say, screw you guys, we're out of here, where are they going to go? So find homes for these guys. So a day of research, they found 2 places you could go to find at least 1,000 square feet. Couldn't find anything for 1,000. Minimum was 2,000. The other one was 3,000, 2,400 and 3,000, something like that. And they were both like $12 or $14 a square foot, triple net, which means they were almost twice as much as what
Yeah.
we cost.
Uh-huh. Mhm.
So that's real. So not only could they not find, if you had a 500 square feet or 700 square feet with us, not only do you have nowhere to go in this market, if you did choose to take on more space, it would cost you twice as much for 3 times the space than you need. That's interesting.
Was a niche. Okay, so that's a niche with a niche.
So we
Awesome.
started looking into what's going on with Amazon and really last mile warehouse and logistics and it is fascinating, absolutely fast. So this is what we know today, and that's what we're building. So the niche we're building, we call it pro storage because we have contractors in there, we got business owners, we got boats and RVs because they're big enough, and municipalities love them because they don't like seeing the open air boats and RVs. They love that they're pulling in and the door shuts, right? So um, we didn't want to call it contractor storage because that didn't, I didn't, you would, if you were an RV owner, would you park at a contractor storage place? I didn't want to call it. So anyway, we ended up calling it pro storage. So that's our, it's not, it's not trademarked because there actually is a digital trademark for pro storage, but
Mhm.
we're introducing that label in the storage space of pro storage, our brand name Store Pro. But that's what we're building. And here's why. Here's what we know today. Amazon and Walmart know right now if you want to buy something and you can't get it, if they can't deliver it to you, and I'm not saying if you order it at 11 o'clock at night, if it's 2 o'clock in the afternoon, 2:40 in the afternoon where I sit, if I go on Amazon and order something and they can't deliver it to me by tomorrow, they're losing 25% of my sales or their sales.
Mhm.
25% of sales, they can't get it to you by tomorrow.
Mhm.
That same number of loss, 25%, they're expecting in the year 2026 will be same day. So
Mhm.
if I go on Amazon next year and I can't get it delivered same day or overnight, within 24 hours, they expect to lose 25% of those sales.
Mhm.
That is an astronomical number for these companies.
It
So,
is. Mhm.
so they are gobbling up warehouse space everywhere they can that's
Mhm.
already existing in infill, especially dense markets, which is
Mhm.
pushing out all those contractors and business owners. they need a place to go. So we're building them. We're building homes for them.
So you're building on that. So, but I think still many of the investors, they still feel like, or maybe they do not have that much in-depth knowledge about this asset class, and they feel storage isn't as glamorous as hotels or multifamily. So I wanted to hear your viewpoint from your experience. Why do you believe that this asset class is so aligned with long-term wealth building?
It was something I overlooked, as I said early on. I got an email, but I'll tell you how I got into it. I got an email about it in my another period of reinvention, because my distressed debt business that I had took a little lull, and no interest in self-storage. By the way, I've been in real estate a long time at this point. Been to a whole bunch of conferences. No one ever showed up as a self-storage operator. Another reason I knew nothing about it. It's just this untalked about. No one talked about it. Now that's all everybody talks about today, but no one talked about it 20 years ago, 10 years ago. It was just this asset class in commercial real estate that, I don't know. Like I said, it was orange, a bunch of orange doors or red doors or chartreuse colored doors, as the extra space doors are colored, right? And I thought that was the market. But I got this email. When I say I thought that was the market, I thought those three big names and Life Storage, or those four big names were who owns self-storage. I get this email from this guy, Scott Myers. I don't know him. And it says, subject line, no toilets, no real estate without toilets, tenants, and trash.
Yeah.
I'll open it. So I open it. It's not true, by the way. No, tenants are our lifeblood, and sometimes they leave trash behind, but there's no toilets. In the body of the email is what blew my mind. He went on to say, 80%, this was the line that got me. 80% of all self-storage facilities in the United States are owned by mom and pop owners. What? I would have thought it was the other way around. 80% mom and pop. I just stopped and I read it 3 times and said, oh my gosh, I need to learn more about self-storage. The reason I said that is because I was in a business, I'm still in a business that's just the wild, wild west in the secondary market of distressed residential second mortgages. The secondary market for that is mom and pops, and it's dislocated and fragmented. And mom and pops are, at least it spoke to me that they weren't sophisticated. And this is just a general label I'm putting on. That doesn't mean they're all unsophisticated. But it just said opportunity. And it turns out I was right. So I went to his academy and I went for a masterclass first. I think I bought his course. I read all about it. And then I went to his academy and I learned about self-storage. And here's what I know. And here's what I teach now after buying 20 facilities and now developing 2 pro storage facilities. It is absolutely an amazing, incredible time to get into this space for any number of reasons. It should be. And now that you have amazing podcasts like this to listen to, I didn't have them back in the day. I had to drive around and listen to the radio, and nobody educated me while I was driving around. So thank you for doing what you do. But and there were no webinars to go on either. But we had to. I'm sorry. I think it should absolutely be part of your progression today, because the step it may seem like a huge leap to get into a commercial real estate asset from a residential asset. It is not in self-storage. And there's a couple reasons for it why. One is the size of the facilities. So my impression of CubeSmart and Public and Extra Space owning the market, well, they do, depending on where you draw the line of the market. So above 50,000 square feet, you could argue 40,000 square feet today. It's those names plus a lot of names you've never heard of unless you're in the space. They own 90% of the market, 80% of the market, right? In that size and above. But 30,000 square foot facilities and under is where most storage facilities are. There's more of them. And I'll bet you they own less than 10% of that market. Bet you 90% of that market is owned by now mom and pops or companies like mine. Now, we don't qualify as mom and pop. Mom and pop, they started defining as 3 facilities or less, right? So that's number one. You're not competing with the big boys, right? We're not competing with any REITs or any institution. It's not happening. Um,
So that's another niche within niche, right?
yeah, now I'm in the same
Yeah.
niche and I'm niching down.
Yeah,
Right.
exactly. So I'm going to ask you, I'm going to shift the gear here a little bit since our podcast is wealth wide. So we talk about the wealth building strategies, and this is one of the good strategy that you're sharing with us, the self storage or post storage. How you can build a legacy of that. So we all know wealth isn't about just numbers; it's about what we leave behind. So how do you see self storage or post storage as a vehicle for building generational wealth and legacy?
For folks that are listening to this podcast, that you just don't know that they are.
Mhm.
We have the ability. You want to take let's say an $800,000 multifamily asset. You're looking at that's your next progression from the 20 single families you own. I don't know, right? You need 25, 30, 35% equity to put down, plus closing costs, plus working capital, right? That's a lot of capital. You might
Mhm.
not have it. An $800,000 self-storage facility is a business. Multifamily is not a business. Retail is not a business.
Mhm.
Office building, not a business. Self-storage is a business. That means we can use SBA loans,
Mhm.
and we do all the time. Most of my students use SBA loans to buy their first facility. What does that mean? They can buy self-storage facilities with 10% down,
Mhm.
15% down. So
Mhm.
you buy an $800,000 facility with a 30% down, that's 240, 250, you're $300,000 in closing costs, right? You could buy an $800,000 self-storage facility with 80,000 down plus closing costs. You might be 100 for half the cost, half the cash, half the equity, right?
Mhm.
Self-storage, we are growing the NOI. We can grow the NOI faster than we can grow the NOI in multifamily. We
Mhm.
can create wealth faster. We can
Mhm.
get into it with less wealth, with less equity and create more equity faster.
Mhm.
That's why it's a generational builder.
Oh, that's why it's a generation. That's how you create the legacy. But you said you can create or you can grow the NOI faster. So can you share with us what are your secrets right there? How you can grow the NOI faster?
Yeah. So what we're looking for in the mom and pop, 10, 15, 20, 30,000 square foot facilities, what we find all the time is that they're not run well. It doesn't mean that they're not smart people. They're typically just older. They're not using technology. They're tired. They're 100% full. It's long paid off. They're $20, $30 below market rent, and they don't want to upset the apple cart by raising the rent. They know their customers. Their customers love them. They love their customers. It's just easy, right? But they're leaving all that money on the table. So how can we grow the NOI faster? I'm buying their NOI, and
Mm-hmm.
they haven't done anything to it. And
Mm-hmm.
on top of that, NOIs are down over. When we buy it, we're looking at the last 12 months. That's what we're buying. For the
Mm-hmm.
last 12 months, expenses are up and rates have been down. The self-storage industry came through a rough patch of 2 years there.
Mm-hmm.
So our NOIs are down across the board. And so we're buying what I would call discounted properties today at higher interest rates than we'll probably see in a couple years. So if you can make a deal work today, when you refinance it, it's likely at a lower interest rate. So that's an acceleration. And if
Mm-hmm.
you've grown the NOI, it's a real accelerant on that.
Uh-huh.
And you're going to grow the NOI the way we teach you because you're buying something that's operating 10 to 20% below the market. So
Mm-hmm.
how do you grow it? You come in and you slowly just bring the rates up to market. And if you're buying in a market that's fully saturated, which is what we're going to teach you how to do, then there's nowhere for those customers to go anyway. As long as it's not a declining market and a growing market, then if you lose a customer, you got someone to backfill it with anyway. So we could probably grow the NOI 1.5 to 2 times faster than you can in most other asset classes because of that in self-storage. And we're doing it with less money down.
Interesting. And then can you do the seller financing too, since you said
I
most of
love seller financing, especially when we're talking to 75, 80-year-olds
uh-huh.
who are selling their facilities that are long paid off, and they might even want it. Why
Yeah.
would they want it? Because what happens when they sell their cash flow? They have no more cash flow.
Mhm.
So many of our deals, not many, well, a good amount, about a third of our deals are seller financed, and they're
Uh-huh.
total win-wins. And
Uh-huh.
we play with the dials of the terms.
Mhm.
right? So you want a little more in price? Okay, we just lower the rate. You want a little more? Okay, we'll do that, but we'll bring the price down, right? So, and we just come to win-win solutions with these sellers. And look, here's another reason. You don't have to believe me, but believe this stat from Forbes: 2.5 million businesses will cash flowing businesses, 2.5 million cash flowing businesses will change hands in the next 10 years. And most of them will be seller financed because they're all owned by people that are 70 years and older.
Wow, so there's a huge opportunity. So what are some of the mistakes you see investors make when they are thinking about, stepping into self-storage, or, like we were talking about just creating a legacy earlier, or
Yeah.
creating wealth build, or use this as a wealth building tool or a wealth building strategy?
Mistakes I see people make are there's two main ones. One is I'm in the business. I'm a builder. I own multifamily. I know what I'm doing.
Mm-hmm.
No, you don't. You know a lot of the terminology. You know how to finance it. You know 80%, 85% of self storage, but you don't know the last 15, and the last 15 will put you out of business.
Mm-hmm.
So that's the sophisticated mistake, I'll call it.
Mm-hmm.
The unsophisticated mistake is um, I listen to a podcast, or I listen to a lot of podcasts, a couple in particular, and with AI, I got it covered. I know what I'm doing. No, you don't. Because listen, we live in an amazing time. We live in the information age. You can find out everything you want to know for free on the internet, right? Between AI and Google, it's all out there. There's no secrets. How you use that information matters,
That's
right?
called
So
wisdom.
what's that
I said
called?
that's called wisdom.
Yeah.
So
So
that
those are the
comes
two.
with the experience. And then that's the reason people say, finding the right mentors or working with the
Yeah.
experienced person in that particular industry or asset class, that matters the most, because it's kind of, to me, if you look at the business world, it's kind of a business intelligence, because this experienced person has put the systems in place or the processes in place, how to excel, or like you're using the word progression, how to progress.
Yeah.
So that's the best thing right here that you're sharing with us. Sorry to
Yeah.
interrupt you. I just wanted to.
No, you're spot on. It's wisdom. You nailed it. It was the right word to use. It's wisdom. You got to get the wisdom. You need a coach. You need a coach and a mentor. And again, as amazing as this podcast is, that you're sharing all this information. It's just information at the end of the day. Hopefully, it sparks someone to go do something with it. Get a coach, get a mentor, get someone to help them. But at the end of the day, it's just information.
Mm-hmm. I agree with you 100%. So let's talk about a little bit more about self-storage. I know it has been evolved dramatically over the years. I mean, I have one as well. We built ground up, like we were talking earlier, I was telling you about it. It's about close to 600 units. And then I do have first-hand experience, but not as much experience as you do. You have done 20 of those. So how do you see this industry transforming into the next decade? And what does that mean for investors who want to get in now?
Yeah, people ask me this question all the time. Is like, did we miss the boat? I said, no. I mean,
Ah,
self storage is in its infancy, if you ask me. Just look at first of all, our growth rate. We are undersupplied in housing, which means we're undersupplied in storage.
mhm,
Storage and housing go hand in hand. We're undersupplied in housing before the last several years
mhm,
of, we'll just call it immigration, right?
mhm,
So we've had a non-natural increase, right? Natural being birth rate, a non-natural increase, significant increase in our population.
mhm,
That is an addition to already being undersupplied from a natural increase standpoint. So, and then on top of that, but those are just a population growth rate. You could say, well, we could overbuild and catch up. More importantly than that, my generation, I'm Gen X, we use self-storage I'll say it differently, 10% of our generation uses self-storage. And we're the smallest generation, right? The generation after next ones after me, millennials, they're using it at 30%. And I like it, and the generation after that is expected to use it as part of their lifestyle. So I liken it to, and there's some factors that I'll throw at you here that'll support that. I liken it to, I grew up in a world before cell phones and after cell before you knew what the heck they were, and
Mhm.
now I wouldn't know how to live without one, right?
Exactly. Uh-huh.
I've bridged those worlds.
Exactly. Uh-huh.
The millennials have sort of bridged that world of self-storage,
Mm-hmm.
and that's the 30% adoption rate. The
Mm-hmm.
Gen X, I think, is the one after that. They're expected to be
And
50% of
Z, right?
whatever. X, or sorry, I'm X. Z.
You're a Z,
I don't
Z.
even know my generations.
Yeah, but
Uh,
my question is, I disagree with you a little bit here.
yep,
So you correct me, with your
yep,
experience. Because I just feel like Gen Z is the new generation. They are all about experience. This generation is an experiential generation. They do not believe in hoarding. They do not believe in buying big homes or big cars or whatever. That's the reason we have all these companies popping up like Uber or Airbnb or even this Poshmark or whatever the companies are there, right? These are all the shareware, I would call it, the companies, because you wanted to share everything, right? People think like, why would I wanted to buy $100,000 car if I can just Uber anywhere? I don't even have to drive. Basically,
yeah.
even the driverless cars are coming. Just an example. So in this scenario, I think this is a question I asked somebody else too who came before on my podcast talking about self-storage. So what is the future for self-storage? If they don't even have that much stuff. Even I was talking to my friend the other day, he says, my son, he just got his job for last couple of years, he's doing so well, but he wants to live at home, but doesn't want to live at home. Living at home means just he has a little bit stuff he wants to store at home, and then he wants to travel all over the world. So it's kind of a nomad lifestyle. So I would
Yeah.
like you to comment on that from your experience, and what do you see in your crystal ball?
I totally appreciate why you would say that, because you're correct on the home and the car, but not on the stuff.
Mm-hmm.
So on the home, yes, they're living at home more. They're actually living in apartments longer, 10 years longer than
Mm-hmm.
my generation. And by the way, the factor I was going to say supports it is apartments, they're building smaller and smaller, less
Exactly.
storage in each one,
Mm-hmm.
right? What they do want, though, is all the same stuff we have. In fact, they're buying more. So that generation is buying at the same age, they're buying more stuff than we bought, and they
Mm-hmm.
have less place to put it.
Mm-hmm.
Right. So experiences, 100%. You're
Mm-hmm.
right. I agree with you. I shouldn't say you're right. I agree with you.
Mm-hmm.
I agree with you that they're staying at home longer or living in apartments longer. They're not buying homes until they're in mid 30s now.
Mm-hmm.
Right. But they have the stuff, and the stuff has to go somewhere. And the ones that are traveling, they have storage units. If they live at home, sometimes they have storage units
Mm-hmm.
because there's
Okay.
not enough room at home. These are this is not my act. These are industry
Those are
stuff.
all the facts. Yeah.
Yeah.
No, fair
So
enough. I just wanted
yeah,
to ask a question because it comes to my mind all the time. And I know,
I
uh,
thought the same thing, and I didn't realize that their habits hadn't changed other than
uh-huh.
car and home. Right?
Mm-hmm.
They're not buying McMansions. That 100%. But if
Mm-hmm.
you look at the multifamily developers, they're telling you they're building more. They can't build them fast enough, and they're building them smaller.
Smaller,
They
yeah.
have
Yeah.
to have storage. It's
That's good.
fascinating. Yeah.
So we are out of time. Actually, we are over time. So we're gonna move into a rapid fire round. I'll have you back some other day because you are a wisdom, right here, pure knowledge that you're sharing with us. So we'll have you back and do a second episode with you to dig deeper. But at this time, I'm gonna take you to a rapid fire round. I'm gonna ask you 5 questions. You're gonna answer it in one word or one sentence only. Are you ready?
One word or one sentence. Okay.
I'm gonna go really fast. Okay. So number one question is wealth means.
Health
The best investment I ever made was
in myself and my education.
a book that changed my perspective is
Who, not how.
I love that book. Uh, my morning non-negotiable is
It's gonna sound funny, but I have these 3 games I play with my friends. Wordle connections and sports connections. And it's my morning, kind of wakes your brain up, and they're brain teasers.
that's good.
Yeah.
One piece of advice I would give to my younger self.
It's the same advice I give everywhere on podcasts, everyone I talk to is it's going to sound funny, but there's a story before it. You have to know what's going on in your kitchen.
I like that. You need to know the recipe too.
Any bit, you have to understand what's going on in operations. And
That's true.
I lost money in a bar and restaurant because I didn't know what was going on in the kitchen.
And I think that's a really good strategy, because once you know what's going on in your kitchen, you can tweak the recipe to cook the final product the way you want it. And that's the reason I was saying, yeah, you need to know the recipe. You do not need to know the recipe 100%, but you need to know what's happening. So you know where the leaks are, what is working, what is not working. So you can go ahead and, patch it or work around it to make it happen for you. So this is really good. Joe, like I said, you've been awesome. And thanks for sharing your insight, your knowledge. How can people reach out to you?
Email is the best way for me. Joe at belroseam.com. That's BELROSE, A as an asset, M as in management.com. And I'm happy to field any emails, point you in the right direction, and would love to have any of your listeners join us at an academy. And if you email me, I can tell you what that's all about, I should say.
Thanks again, Joe. Like I said, thanks again for sharing your wisdom as such a, insightful episode. And to our listeners, remember this: wealth is more than just numbers. It's about vision, alignment, legacy, and transformation. So look beyond the surface, because and that's where the real opportunities live. And once again, we're going to wrap up this episode by saying this: stay inspired, stay intentional, and keep building your wealth vibe. I will see you next time with another awesome guest. Bye for now. Thanks, Joe.
Thank you.
Thanks for tuning in to the Wealth Vibe Show. If you enjoyed the episode, be sure to subscribe and leave us a 5-star review. And don't forget your free gift. Download the Busy Professional's Guide to Real Estate Investing at loombainvest.com. See you next time with another amazing guest and another powerful conversation.